Hi folks, it's Andrew Pancholi here. It is the 10th of April. In fact, it's 10 past 10 in the morning here in the UK. And I want to give you an update on where we're at with the markets. So yesterday we saw this massive jump up in the S&P 500. The futures this morning have pulled back again. Are we out? I tell you what, I've just come back from America. I was watching, well, I won't mention which station, but everybody's telling you what a great buying opportunity is, that price earnings were this, they were 55 on Google and Alphabet, and now they're down to 27. It's never been a better time. Well, and especially those of you that have been following this work, subscribers of the Market Timing Report, and those of you that came to the masterclass that we had in January knew all about this top and how important it was coming in. So, basically, what I'm going to do in this brief video is update you with some market charts, where the market could head next, why you need to be careful, and also show you how history repeats. So pay attention. I hope this is useful to you. Now, the first thing I want to show you is why we got this low in just a few days ago. And looking here at the futures, just ignore this title here. We're just having some issues with our software reading the incorrect title through. This is the continued futures here. What we saw here, those of you who've done our Market Timing Report trading course, you were ready for this high here because we had the masterclass right here. And I'm going to come back to this in a minute and show you how why we knew this was an important point. Remember, sentiment-wise, everybody was expecting the Trump bump, and right now we've seen the Trump dump. And are we coming back into the new bump? Well, first point was that the first move down, doubling that range, gave us the exact low there. But as you know, if you for those who get the report, I've been forewarning you about this. The very important Fibonacci levels are here, and I'm just going to bring this in. So there's the doubling of that range. This is the global financial crisis low right here. This is the high we had. Why did we get that high? Let me show you that in a minute. But the point is here that we have come back to the 0.236 retracement, the first Fibonacci level. So just be aware of that. This high, let's address this high right now. Let's do that right now. Well, perhaps the easiest thing, and I know a lot of you, this is obviously going to all our subscribers and followers, and so a lot of you came to this masterclass, and I just want to run through this with you, and we'll go into a bit more detail, then we'll go back to where the markets might be heading right now. And also, I want to show you some really important patterns that you need to be wary of. So, first of all, this went out on the 26th of December last year, on Boxing Day. And I took a break from the holidays because I put two and two together and realised things were far more critical. So many of you got this email if you're on our list. And don't worry about, I'm just going to gloss over the key points. And the key point is that I said we're in the danger zone because our timing system, our histogram system here, we're highlighting this major high coming in, a major change in trend. So remember, sentiment was still very, very bullish at this time. And that was the thing that was going to catch people out. Here we are entering the danger zone. And the idea of, for those of you who are not familiar with these histograms, basically when we get a peak, we know to look for a potential trend change. And here was the end of that bear market coming in here. And then we went up. And these are all known in advance. That's the whole point. Here they are falling out. You can see them, the histograms for the next 2025, 26. And of course, we fine-tune these into daily histograms as well. Weekly and daily charts, so we really can identify these moves. So this is what this was all about. But not only that, you see, last year we did this was written in January 2024. This was the forecast in our year ahead report, not for 2025, but 2024. We said the market would end up being up. Because this was the proprietary modeling, and you can see this is the forecast I put out in January 2024, and this is actually what happened. The black line there, well, yes, it's not perfect, but it's not too bad either. It's not too shabby. We did close up, we did get a low here, we saw these highs here. Not bad for a course roadmap, but of course this becomes a lot more powerful when you put it together with the techniques that we use and the other timing system. So mainstream sentiment is wrong, and this is really what helped us here, this key point here. And the whole point of this stuff is that sure, we reached a critical price target there at 61.20 was the forecast I was giving, and we came in at 61.47, less than 1/3%. But it was the timing, and that was so important. Timing is everything, because if you're too early, you're incorrect, and if you're too late, you can't get in. So that was the first point I wanted to show you. In fact, let's take a deeper dive into this. Now here we are. This is the full chart there, and you can see this goes all the way back here to 2009. In fact, it goes back a lot further than that, and it does go all the way forward to, right now we're running it through to 2032, because there's some really interesting stuff coming up over the next few years and months. But we're more interested in the moment. This is your money, this is your 401k, your retirement fund, etc. And but just to show you, so this was the spike we had. It was one of the biggest spikes we'd ever seen. And yeah, just taking some of these, you can see how these previous spikes, this one we're going to look at in a minute, this this one here, the COVID high here, and you can see how these spikes have corresponded. That was the global financial crisis low, and of course the report wasn't published then. We were just advising major hedge funds, and so that really helped a lot of people. And of course, for those of you that were about, then at that point in time, you will recall that it was all doom and gloom there. We'd all the banks that were about to fail had been bailed out, and things were really dire. We had the CDOs thing, the housing crash, all the rest of it, and that's 15, 16 years ago. So the point is that people aren't really ready for what we've just seen, because if you're probably 35 or less, even if you're professionally in the markets, you haven't witnessed anything other than this COVID pullback and here, and this bear market here. So, you haven't seen a crash before. So this is quite important. And then just taking this one stage backwards, this is what we published on the 4th of January. I showed you what we put out on the 26th of December, but this was put out. We are approaching key long-term patterns. The monthly cycles are very strong, and we also hit very important price targets. So this was all in the latest market timing reports there. So this was very valuable information. Let me take it a stage further. Now, what we're seeing here is something really interesting. I'm just going to, let's just expand that there. As I say, what we've now done here is we've seen this retracement here, and the futures are down as I'm filming this. And if we take this low here, we'll come to where this market might go and what might happen next. You can see we made a 50% retracement. Didn't even pause at the 38.2. Now I want you to be aware of this number on the futures. 56.57, 56.58 is a 61.8% retracement. It's a very critical number there. Watch out for that. And here is why. Hold these thoughts. Let's take a look at history and see what could potentially unfold next. Okay. Now this is 1987. Yes, I know you find it difficult to believe, but I actually do remember this. So I don't look that old. But no, so joking apart, the market came off very sharply. It hit a critical target here on the Dow, the S&P, and also the UK FTSE. I remember this very well. It was earlier on in my days with the markets. And this is what I learned by looking at history. Take a look at this. We came down, and then the following day we made a low, and then we made a big high. Oh, I thought this is really interesting. So what we can do now is, with this high and this low in place, we can put in our Fibonacci retracements and look, see what happens. Remember, this is relevant to what I've just shown you and where the futures are trading right now, and that is why I'm filming this video right now. Is we've hit 50% and we're pulling back off it. So what we see here is that we got a 50% retracement like this. Then we had this, a pullback. Then we had this and a retest double bottom, and then it came back up, hit the 50% again. Then it hit the 61.8% retracement. Remember I told you to make a note of that number. Was it 59.47? I'll come back to that in a minute. Here we go. It did this. And then look what happened. Oh my. We got a crash. Now, I'm not saying this is what's going to happen now, but I do think you should protect against it. Because right now, as I said, I was in America. I just literally got back yesterday. Everybody... You know, those guys, well, I don't even want to mention the shit today. I don't need lawsuits here. But I forgot how inane some of these TV stations are, because they're just there to sell you advertising, and they're there to go long all the time. And they are like, this is the best opportunity ever. It might well be. It might be this. Because if you look at our year ahead forecast for 2025, you know, we're not expecting it to all be tears. So this is really important. Look how we made a high, we made a low, we made Fibonacci retracements here, and then we saw this sell-off there. Now, the story doesn't stop here. Now, this one, for those of you, because this is, I say, going out to all our subscribers as well as going on out to everybody. This was happening. This was the pandemic top coming in. One that we fully forewarned everybody about. We gave them the exact date of the top. And you can see, I won't bother showing you those old reports right now. I think they're all on the YouTube channel anyway. But we were coming up to this top here. This is when the pandemic was first sort of mentioned, the first warning there. And look what happened. We came back down here. Oh, we had a pretty sharp pullback. And then we got this low here. Let's put the Fibonacci levels in. We went through the 382 level, up to the 50% level, and then boom, we came down, all right, like this. So watch out. This is what happens. You get these retests here like this. So you can see 87, you can see 2020, you get a high, pull back, we'll come back in, and we get this situation here like that. So here we go. So this is where we're at. So are we going to sell off and crash from here, or did we already do that because we did that here? I don't know is the answer, but there are ways of telling, and those of you who have done our market timing report trading course know exactly how to use all this stuff here. What I want to share with all of you is this. Let's zoom it out. Where could this market go? Because now those people on that channel are telling you all to get stuck in. They were there. Get stuck in, get your money back in. This is the best opportunity ever. Price earnings are incredible. Yeah, we might well go to new highs once all this is settled down. And there are reasons for that, again, geopolitically, why we might do that. But in the big scheme of things, just be alert to the following, right? So we are here. We are at the 23.6% level. If we carry on down, the next level is going to be the 38.2% level, okay? And then we see 3,419, which is the 50% level of the entire move up from the global financial crisis low. Look at the global financial crisis. Was a big deal at the time. It doesn't look a big deal on this chart, right? All the way up to here. And the 50% level is this here. And the interesting thing about that is it coincides here pretty much with the pandemic crash high. So basically we've got a doubling of his range, and that was one of the reasons we knew that that level there was important. This 61.63 is a futures, the front month futures, as I say, just ignore that there. So watch out, this level here is really important. This could be hit 34.16, and in fact the other level is just over 3,000, which is not shown here. So with this in mind, let's take a look at this chart here. So this is back to the latest futures chart. As I say, we are off from there. As we say, we've made the 50% retracement there. We did actually got that 50% retracement there in the smaller move before it came back down. So that's the reason why this might be an important low, but I don't think it's over yet. There are several reasons. Because if this is this could be an ABC correction, in which case this would be over. But if this is a 1, 2, 3, 4, 5 correction, then we want to be looking at that 3,400 level, and that's why for you Elliott wave fans, you'll be able to work the waves as well. But there are no certainties. We don't forecast the market per se. We trade what we see. So what are we seeing right now, and how do we protect ourselves from where we are right now? Again, one of our 4 important tools from our course is exactly this one. And this is showing us a lot of interesting information. First of all, a break of this green line here and the market trading above it would be more bullish. A failure here would probably see us come down to this point here. Why would we come down to this point here? Well, let's take some of these fib levels out so we can see in more detail, and that there. But we'd now be looking at the retracements. If this is an important high down to here, watch for these key levels here: 5274, 5193 and 5112. Again, subscribers, there's just a quick update for you with those. But what we'd be really looking at there is these lines and these lines as being support lines. If this line here breaks, then you know we're heading further down. Basically, we know this is a really valid setup. Again, all taught in our course. This is how it's working so well. So watch out. And the latest dates that you need to be aware of are in the latest report. But please understand that whilst there's great optimism yesterday, we're not sure if that's going to follow through. So I hope this helps, and you can find out more at markettimingreport.com. Thank you.